Hey everyone, welcome back to the Daily Gold Podcast. I'm here with my buddy Jeb Handwerger of Gold Stock Trades, and today we are speaking with George Salamis. He's the president and CEO of Edgewater Exploration on the venture. George, as we get started, I want to talk about the junior miners with respect to the major mining companies because you have an extensive background working with the major companies such as Placer Dome and Cameco. You've been involved with several large mergers and acquisition transactions. And right now, we see the majors have a lot of cash due to the record prices of gold and silver that we've seen in the last year. And these big companies are balancing whether to distribute it as dividends or to bolster their pipeline of growth, especially when many junior miners are selling at bargain basement prices. How do you see the majors going forward in this environment?
It's fairly simple. And yeah, thanks for taking the interview, by the way. Major mining companies and, in fact, the mid-tiers and even some of the juniors are becoming confident enough in their cash-generating ability, and a select few are even returning some of that cash to the owners in the form of dividends and share buybacks. But I think the other thing that you're seeing now is that now that these companies are flush with cash, and of course the margins are there on the gold price versus operating costs, they need to buy new deposits to fuel their growth because they're not finding them themselves. And they're using this cash to buy these new deposits from the discoverers. And they finance these acquisitions through using their balance sheet, basically, going forward. So rather than having to go to their own shareholders to cash themselves up for these acquisitions, they're doing it themselves, which I think is great. I think it signals a great turning point in the gold business itself. The majors usually look to juniors such as ourselves, and they especially look at companies such as ourselves who have projects at the pre-feasibility stage, such as the project that we have in Spain at Corcoesto.
Yeah, George, let's discuss the Corcoesto gold project in northwest Spain. You recently released a preliminary economic assessment on the Corcoesto project, which has a 43101 resource totaling approximately 1.5 million ounces of gold. Some numbers were really interesting, such as a cash cost of around $713 an ounce, producing over 100,000 ounces a year. When you look at some of the comparables, it's quite compelling. For instance, the B2 Gold, when they acquired Oryx Gold for 160 million, at the current market cap that Edgewater has, it's quite compelling. What does this recent release of the PEA, the preliminary economic assessment, mean for Edgewater in 2012?
Yeah, basically, I'll address the sort of the comparison between Oryx and Edgewater in effect, and the comparison is quite compelling. But basically, the PEA that we put out before Christmas certainly brings us more interest to really put us on the map. I think in the end of the day, the PEA signals to the investment community that we have a real opportunity here in this tangible future return sort of on the horizon. Basically, what we've done over the past year and a half is we've been focused on growing Corcoesto in Spain and optimizing value for our shareholders while we ensure the highest standards, obviously, of environmental stewardship at Corcoesto. That's really important for us going forward, and this is a process that we're in. So we're really excited with the outcome of the PEA, and we think that we can add more value going forward to the next phase of the project. Permitting is now well underway, and will be based on the design of the PEA that we put out before Christmas, roughly speaking over about 100,000 ounces a year of gold production for 10 years. And right now we've got about 4 drills active on the project in an effort to convert inferred resources to a measured and indicated category. And we will do this. I've got no doubt about this. The geometry of the ore body really lends itself to relatively straightforward resource to reserve conversion. We plan to complete an additional 20,000 meters of drilling this year and begin the definitive feasibility level, which in of itself is a next level of de-risking that will signal to our shareholders that we've got a real viable bet here. So I'm really confident we'll be able to secure an exploitation permit on the project during 2012. It might be sometime mid-year according to the schedule that we put forward. To answer your first question, Jeb, the comparison analysis between Edgewater and Oryx, hugely comparable projects. If you look at the two PEAs, and when Oryx put out their PEA last year, that's what basically put the flag up in terms of, this is a great bet. and hence the reason why B2 took them over. If you look at the average annual production, which they quoted on their study, they quoted 100,000 ounces a year of gold production. We quoted 102. They're looking at operating cash costs of $725 an ounce. We're looking at $713 an ounce. Our initial capex is $135. Theirs is $110. Our mill feed grade is 1.7 grams per ton. Theirs is 0.5. Our payback's 3.4 years. Theirs is 4.9. So basically, if you put those basic PEA metrics together, hugely similar projects. And again, this is what was the bell ringer, if you will, for B2 to make the leap into taking over Aurex on a friendly basis.
Now, George, additional recommended work included resource conversion utilizing surface drilling for in-pit resources, as well as underground access and drilling targeted at the deeper resource areas. Could you explain this and tell us what sort of exploration potential you see with Corco Esto in 2012?
Yeah, basically just taking a step back, throughout my career I've drilled off deposits in many of them and turned them into viable ore bodies at which we've developed and moved on to production. And in that process of doing resource to reserve conversion, basically converting inferred resources to a measured and indicated category, I've always found more. Then that's the rule of thumb, is when you're drilling, you're doing your infill drill program, you're also stretching that envelope out and you're finding more as you go. So we'll be finding more ounces as we go, as we start to convert inferred to measured and indicated. And almost every hole that we drill, especially at depth now, which I see where is the real potential for Corco West to grow well beyond 1.5 million ounces. Every hole that we drill at depth will not only convert inferred to denied, but it also pushes that envelope out laterally and downward, if you will, adding more inferred resources as we go.
Investors have been seeing the concerns over the Eurozone crisis on the front page news. Yet we're seeing major mining companies such as Eldorado Gold buying European gold fields in Greece. It seems that these countries are realizing that mining may make a huge impact on economic growth. How do you see that impacting mining in Spain? Do you see that you guys have local support with the Corco Esto project going into production?
Yeah, I mean that's a very valid question, and no secret, Spain has an unemployment issue. They need mining, and therefore have become extremely supportive of our project. Spain needs high-paying jobs, especially in that region where we are in Galicia. There are 10 mining companies operating in Spain. A little-known fact: people view Spain as being sort of a sparsely mined company, and in fact, there are 10 mining companies operating in Spain as we speak. And in fact, we just ran an analyst trip down to Spain before Christmas, and the analysts all heard the same message from the lips of the ministers and the local mayor. And this is something that I've been harping them over the last year, and it was phenomenal that they didn't hear it from my lips, but they heard it from the lips of the ministers and the local mayor, that both of those government entities are solidly behind this project and the development of the project going forward. They know the economic benefits, and they're getting behind it. The analysts all heard the same story, all at the same time. So that was phenomenal.
Yeah, George, can you touch on the point where we're seeing this recent action from Eldorado buying European gold fields? We also saw a merger occur, a $150 million merger between Aster Gold and Goldor right during the holiday season. Can you tell us what's going on in Europe, and what's this increase in interest of major capital flowing into the Eurozone region?
Yeah, Eldorado's move into Greece was huge. I mean, people for years and years had put a big X on Greece as being a place where permitting was virtually impossible. TVX went through their teething pains early in their growth. Many years ago, many other companies have tried and failed to develop ore deposits, and when European Goldfields finally received their permits to exploit their gold deposits in northern Greece, I think that was a tremendous signal to the market that Europe is becoming now open for business on a mining basis. Eldorado, a great producing gold company, it's had a stellar share performance over years. They saw that coming, and they made the leap in. So that was a natural. The Aster Gold transaction, slightly different in that transaction was structured for different reasons, and I think it was a great transaction, and hats off to Kerry for it. Aster see their acquisition as a means of fueling the growth on their Spanish asset. They acquired a small-scale gold producer, which is going to be cash flowing, or which is cash flowing, and they're going to use that cash profile to fuel growth on their Salave gold project in Spain. But both of those transactions basically signal the same thing, which is Europe is open for business, and things are going to happen in Europe down the pipeline, not only in Spain, not only in Greece, not only in Scandinavia where I've worked before, but in other parts of Europe as well.
George, I want to talk about your other project because when I look at Edgewater's current market cap of about roughly $30 million today, and also you have a strong cash position of $10 million, that tells me that the market is giving almost no value to your Enchi project, which you acquired from Redback Mining, and you currently have a joint venture there with an impressive partner, Kinross. You recently released impressive drill targets. Can you comment on the recent news out of Ghana? And what are your goals for this project exactly in 2012, and how do you believe this is going to be valued by the market?
Yeah, Jordan, I can certainly comment on that. The Enchi Gold Project covers a huge strike extent of structures that are known to host big gold deposits in that part of Ghana. The same structure that hosts Kinross's 5 million ounce Chirano mine to the north of us is what we occupy on the southern end of that structure. We've had 3 drill rigs completing 35,000 meter drill program, highlighting 3 priority gold deposit targets, which we will be soon releasing our maiden, the very first NI 43-101 resource to be completed. We're targeting sometime during this quarter for that. So that's interesting in of itself. We're going from no resources reported to what I think is going to be a fairly substantial resource reported out there the first quarter of this year. So that will add on, obviously, on a resource base to what we have in Spain, and certainly take us, my guess is going to be over the 2 million ounce mark, certainly on a total basis. We've earned our interest in Ghana, 51% interest on the Enchi Gold Project from Kinross Corporation. We've spent our $5 million to get there over the last 18 months, and we've done a tremendous amount of work. And by the way, Kinross also owns a 5% equity position in Edgewater, which can get increased to north of 10% on a partially diluted basis with the exercise of some warrants that Kinross holds. So Kinross are big supporters of this project. They're a great partner to have. They're with us side by side, helping us out technically, so that's good. So as I mentioned earlier, it's a huge project. 568 square kilometers is what we cover, 40 kilometers of the Bibiani Shear, which hosts basically 2 deposits to the north of us. As I mentioned, 5 million ounces at Chirano, owned by Kinross, and 5 million ounces at the Bibiani Gold Mine, which is north of that. And on our project, we've got a myriad of styles of gold mineralization. 16 known structurally controlled gold targets is what we have, which we've been testing consistently over the last year. So you'll see resource estimates coming out on 3 zones, Bowen, Sawum, and Nayem. And recent drill results which we put out have been great. I mean, from my previous experience in the gold business, mining in saprolite or weathered terrains like this, tropically weathered terrains, results like 2.1 grams over 33 meters, 1.7 over 24, 1.13 over 34. Those are economic grades and economic widths, and you just have to string enough of those together to find substantial tonnages which you can mine in the future. So we've done the 35,000 meters of, we're in the process of doing 35,000 meters of drilling. Part of that amount of drilling that we've done up to now will be included in the 43-101 resource, which we're coming out in the first quarter of this year. So we've done that first phase of drilling. We've defined these broad zones of gold mineralization. There's still lots to test out there. We've got a 5-kilometer golden soil anomaly at the Sawum area. We've only tested about half of it. Again, part of that will be in the resource that we'll announce in Q1 of this year. So it's all looking very, very good out there in Ghana.
Okay, George. Well, thanks so much for taking the time to join us today. We really appreciate it, and we look forward to having you back soon so we can talk about the new 43-101.
Gentlemen, thank you very much.